got two different looks at the economy. The Organization for Economic Cooperation and Development, the OECD, cutting its U.S. economic growth forecast to 1.6% for the year 2025.
Yep.
This is over tariffs, they claim. But the Atlanta Federal Reserve is projecting growth in the second quarter of 4.6%. Take that, OECD. Where are you on this, Ryan?
Yeah, 4.6% is unbelievable, by the way, right?
I know,
and if you even average out the
is.
first quarter, you're at like 2.2% for the year. Now, the OECD, they're a bunch of French people sitting around, probably smoking cigarettes in a room saying, oh, these tariffs are going to ruin everything. They can't imagine that companies right now are becoming more efficient. And I think that's what's happening is the fact that if you look at the fact that we're spending on equipment, artificial intelligence, like companies right now are becoming more efficient than ever. Plus, oil prices are down 13% this year. So the efficiencies that we're seeing in businesses, I think, offset those tariffs, which are really just kind of a temporary bump when you look at actual cost.
No, don't forget the big, beautiful bill. If the bill passes the Senate by July 4th, you've got to believe we have a huge positive reaction for markets with all that spending.
Absolutely. It's very stimulative. And I think that's the actual opposite here is we're going to see GDP growth actually accelerate this year, not slow down, which is the opposite of like what every economist has been saying all year, by the way. And they've been completely wrong.
And you've been buying from day one. You've been bullish on this market. You still want to buy stocks here?
Absolutely. I think at this point right now, if you look at, again, margins are going up. You look at the profit cycle, we're going to be at double-digit earnings growth this year. And there's just so much cash on the sidelines. So many investors have been on the sidelines, especially institutions.